All right, James, what's going on?
Not much. It was exciting trading today.
Yeah, no, it was a fun day for sure, for sure. So we wanted to come on here and give kind of we'll call it a four session little mini series on why trading systems fail. In other words, you can call it a trading system, you can call it a trading plan. Why do most of them fail? And the first one is really, really simple. People don't actually understand what their signal bar is. They think they do, but they really don't. And when we think about a signal bar, everyone knows what a signal bar is and what a setup is. But the question is, an easy one is I'm going to trade breakouts, or my my signal is going to be a second entry buy at the bottom of a trading range. So my setup's the trading range, my signal bar is the second entry. But then the question is, do I really actually understand what signal bar is required for that? And James, I think you anything to say with that?
Not well. Why don't I bring up the chart? Because
Yeah.
this is probably the most useful way of discussing it. So, yeah, this is today, obviously, and I've changed the settings for the AMA breakout paint bar so that it's painting every bar that's breaking out. So we have this indicator is the one that we use in Systems Academy and that we use in PTM and a variety of other quant systems environments. But the idea here is that every bar that's painted red is a bear breakout. The orange bars are bear outside bars, so bars that have a bear bias in their breakout, and green bars like 35 and 63 have more of they're also outside bars, but with a bull bias in the breakout direction. And then the blue bars are bull breakouts, and the black bars are all inside bars.
The
So
first
every
thing I
bar,
see here is this is a lot of information. Like it's a lot of various breakouts.
yeah. So most bars are breaking out of something, and so if you're trading breakouts, and it is a reasonable and responsible thing for most traders to build their first system around breakouts. But if you're sitting down to build a system around breakouts, then the first question that traders and that we start with in Systems Academy is, how are you going to define the breakout? And obviously, there's a lot of parameters that go into that. Like you were saying, is it the well, you were giving setup examples, right? So, like in this case, a low one at the bottom of a trading range.
Hmm.
Here's a low two at the bottom of a trading range. So setups, not signals. Signals are the actual bar that gets you into the trade versus uh, you know, the general market condition, which is leading to the potential signal bar. So all of these bars, every bar that has, and just sticking with breakouts for now, every bar that is colored is a potential signal bar of a potential system.
Absolutely.
And that's I think the starting point that everyone should begin with is to ask the question, if every one of these bars is breaking out, then what is the system that would allow me to trade it or keep me out of the market, at least temporarily, in order to enter on a slightly different condition that breakout has created? And I think that's the most difficult question to answer too, because it requires a significant understanding of not just breakouts, but of yourself as a trader and what will make you feel most comfortable. If the
James, I want to
signal,
I want to add just one thing with that
Mhm.
really quick. For those
Yeah,
of you that are thinking, okay, I have my breakout, I know what my breakout is, or I know what my signal bar is, I know what my setup is, and therefore, I've got it figured out. I just need to trade more examples or take more days and trade it to figure it out. And, an easy kind of, a test, if you will, to see if you really understand your signal bar is do you ever had a moment where you're in a trade, you take your buy, and let's say who knows, you buy the close of bar 7, that really big looking bear bar, and all of a sudden you see the market go sideways, and before you know it, you look at the bar and you get this uneasy feeling because then you see bar 9 and then you see bar 10 start to go up, and you just all of a sudden don't really know what it is that you're supposed to do. And whenever you have a moment where you take a trade based on what you think is your signal, and you really don't know what it is you're supposed to do, and you don't know the expectation behind the trade, that's a really big red flag that's saying, hey, you really don't actually understand this specific situation with this specific bar. You may think you do, but you don't. And the point with this is there are a lot of big bars. There's a lot of bars like 7 that are really big, but there's tons of different examples with context that can really completely change it. Like you look at bar 7 and then you look at bar 55 and 56,
Hmm.
or even bars like bar 4. So there's all sorts of various reasons, and you really have to understand, a big bar alone does not make it a signal.
Exactly. And big bars are incredibly important for understanding the general market context as well. So, most traders don't trade big bars because obviously they require larger risk, but they do have the obligation as traders to understand them. And so that again is similar to the defining the signal requires research, requires spending the time to really think about what in terms of the signal, which signals are for you, which make get you into a trade and require the kind of management that makes you feel good in the market. So whether they're mean reversion, reversal trades for trend resumption, reversal trades for mean reversion. Obviously, two different kinds of reversal trades, whether it's breakout and follow through. I mean, there's myriad types of signals that can get you into the market, but they require different types of management. They may or may not require scaling in. I had traders in
Mm.
Systems Academy who were fastidious about not developing systems that would not require them to scale in, just because they didn't want to scale in,
So
and that
James, are
was
you
great.
basically saying that I've got to if I'm an individual, I've got to take every one of those ideas and really study it?
No, well, I think and actually this is kind of what I talked about
Like,
last
where do
night
I
with that.
begin with all this? This is a lot of information.
Well, yeah, I mean, I think it's kind of what I talked about last night, that you start with one thing, and the one, understanding this is actually so in my experience as a teacher teaching literature, I would always say, and this frustrated people who always wanted new book recommendations. I don't read new books. I read the same books over and over again. So like I've read Moby Dick, and this is gonna frustrate people probably like 150 times. I can probably quote the first two chapters. And I think that understanding, like being able to feel a book deeply, is for me much more meaningful than just consuming book after book after book and having a surface relationship with some idea. Here it's the same principle, that if you want to understand the whole market, that all of the market holistically, the best way to do it is to understand one thing to its core, one thing just so deeply that it allows you to see everything around it more clearly. Because to understand one thing deeply requires you to understand the context in which it appears with complete clarity. And once you have that, then it's easy. You can just glance around. I mean, you glance around the room, you're in a room and you have your signal, and that signal is clear to you because you understand it with perfect precision. And you accept obviously the uncertainty that comes with it. There are clearly defined uncertainties, and
So then,
you understand them, but then you can see everything around it because you understand what that is, and then you can start looking at other things. But the important thing is to focus on that one input, that one signal,
and
and
then when you start to
nothing else.
understand that one signal, all of a sudden you understand the failure and the success of that signal, right?
Sure,
Which means you
absolutely.
can almost reverse engineer. Once you have the signal and you understand it, and you know what the failure is, you've automatically got a second trade,
Oh
right?
yeah, I mean that's so in Systems Academy. That's the principle of the. So once you have your first system, say the breakout and follow through, or whatever, the high probability failures, right? The signals which you understand are not ones that you want to trade for, say, trend resumption. Those give you the foundation for subsequent market research and signal research that leads you to develop your mean reversion system. So every price action system has its opposite, because obviously the market's always either in a trend or a trading range, and a signal is either for a trend resumption or for mean reversion. And if you're trading for trend resumption and it's a low probability signal, then it's the opposite is a potential signal, and that's your mean reversion signal. So then in that case, you always have the opposite in play. And so understanding when that becomes a higher probability gives you your second system.
Absolutely. Absolutely. And that's really, I mean, breakouts and second legs. We'll tell you right now. We're going to tell everyone in Systems Academy, focus on breakouts, focus on second legs, trade the first leg, don't trade the third leg. If any of you that have listened to our videos, that's been said probably 100 times. And it's really the key. And that sounds like a really simple thing, but there's a lot that goes into really understanding breakouts. Because if you don't understand a breakout, there's no way you're going to understand the market cycle. And everybody knows, there's a lot more to a breakout than a big bar or a series of bars that make a breakout. There's everything from the momentum, the context, all the little nuances. And so
Indeed.
that is what's important. Anything else, James?
I think that's more than enough to go into the weekend with. So for anyone who's going to sit down this weekend and do some research, just think about yourself, think about the things that make you happy when you're in the market, and if it's hard to define that, just spend some time thinking about the types of trades you would want to manage, how long you would want to be in a position for, and then the types of bars that would lead to that that condition. So if every bar that's breaking out can be a signal bar, how are you going to narrow that down? And so just start there, start thinking about yourself, and it's most important that you treat yourself generously, gently, and not putting yourself in a position where everything is a struggle is a very important first step. So
Absolutely.
Thinking about everything as a breakout and about what is going to make you feel good is incredibly important.
And we'd be curious, even you put it in a comment, just like what you think your setup is or what you want it to be.
Sure.
Actually, very curious to see like who could write out what their setup is or what their signal bar is really, because that's really what we're talking about is what, we have a setup, breakout, or the context of it, but what type are you looking for? What actual type of signal bar? And we'd be very interested to see it.
Yeah, drop a comment in the on the video. That'd be great.
Yeah, and so we'll be here in the next day or so, and we'll give you what the next reason is that most systems fail.
Indeed. Talk to you all soon. Have a great weekend.
Have a good one.
Okay. See you, Brad.